All right, well, let's go ahead and let's do this. You guys get ready to get started? You want to find out how to do your first apartment deal without money or experience? I'm going to walk you through what that looks like today. So, first things first, I know a lot of you, you've probably been trying real estate stuff for a while, and maybe you've had some struggles, maybe you failed. It's not your fault. None of this is easy. And I know this probably isn't your first webinar, so I'm going to do my best to show you exactly what you need to do to get into your first multifamily deal without the experience or without having all of your with your own money. Okay. And I've got a couple of my goals for today. So first of all, look, if you're brand new, then this webinar is going to be great for you. You're going to learn a whole lot about multifamily investing, apartment investing, and why I love it so much and why I think you should too. Or maybe you've gotten into the apartment investing space and you've struggled a little bit, and that's okay too. I'm going to help you out, guys, out the best that I can. But what I really want to do is I want to show you why I believe multifamily syndication is the fastest, safest, most scalable path to financial freedom. And what I want you to realize is I've tried a lot of these things, and what I want to do is I want to help you skip some of these pains that I've had along the way. I believe multifamily investing is better than single family. Okay. I've done the single family and it's a lot of work. I've also done the flipping and it's a lot of work. I didn't do the renting because I was so tired of the work from the single family and the flipping. And there's probably a lot of other strategies. So what I really want to do is I want to help you skip past a lot of these. So do you guys want to learn how to get into multifamily investing? Does that seem exciting to you? Maybe you can learn how to scale and just move a lot faster. So I'm excited to share this with you. But look, if you've never met me before, my name is Stephen Lee Thomas. I'm a multifamily investor. I'm an entrepreneur. I'm a podcast host. And I'm a business coach. And I teach people how to buy apartment complexes, their very first apartment complex, or help them scale into larger deals. Okay. So a little bit more about me, my partners, and I. We've been doing this for a while. I'm in my seventh year of doing this. We've bought and sold several properties and gone full cycle on a lot of those with really good returns, not only for us, but for our investors. And so you've got a sampling of a lot of the deals that we've gone through. Here's what I want to start off with, guys, is it was not always that way for me. I was classically trained to go to school, get a job, invest in the stock market, and everything's going to be great. But it wasn't always like that. My first job out of college, I made $40,000 a year. I did not make a whole lot more than the job I was working. I was bartending at the time, and so I actually was making about the same amount of money with a college degree. It was kind of crazy to me. So, but I did the things. I got the job. Got into corporate America and struggled along the way. I wasn't making the money that I wanted to make, and so I was like, "There's got to be a better path here for me." And what I learned is that if I do things different than just doing the single family flips or the single family rentals, when I was able to get into my first multifamily deal, everything really, really, really changed for me. And so now I'm able to work on my own terms, and I want to help other people do the same. So look, I know my story is not unique. And so for you, maybe it's you're stuck in the 9 to 5 job and you don't feel you have a good exit strategy. Or maybe you've tried rentals or flips, but you're feeling burnt out from that. Where's the scalability here? Or you want some passive income, but maybe you don't know where to start. Okay. And so a little bit about me. Now, this is my first deal, okay? Here's what I want to call out. Okay, so this is a very large deal, 184 units. It was an almost $30 million purchase price. The loan was $24 million. We raised almost $8 million in capital. Projected returns on the deal is over 100%. The deal day one, $280,000 acquisition fee. That's what we paid ourselves. And overall, as a partner, the partners and I we're looking to likely split about a little over $3 million. So what I want you to realize is this was a very big deal, but I didn't have any experience in apartments before this. I had zero experience in apartments before this. Okay. If I can do it, I didn't do anything special other than I learned the steps to follow and how to surround myself with the right people. And I was able to make this happen. And you guys can do the same. Is that exciting that you could get into a very large deal without having tons of experience or having to put in a bunch of your own money into the deal? Because that's exactly what I did and got a very, very large apartment complex. Right. So, couple of things I just want to like break down some of these myths we even get started. Okay. You don't need millions of dollars to do this. You don't need a real estate license to do this. You don't need to quit your job. I was very busy in corporate America, raising my family, doing lots of other things. Okay. And like I said, I didn't have any experience that allowed me to get into such a large deal. So, but first, how do I get into my first multifamily deal? This is the question you guys are answering. So that is really the one question that I want to answer for you today. All right. So we're going to go through, we got 5 core pillars that we're going to go through. I'm going to break those down one by one. And by the end of this, you'll know what you need to do to get into your first apartment deal. All right. But why apartments? Why did I land on apartments? Because I don't like other real estate investing. Like that's reality. I didn't start there, okay? My wife and I had, bought a home and thought, well, maybe we'll move and rent it. We decided not to because we weren't going to really make any money renting it. Somebody else is going to wear it out. Maybe we'd get some appreciation. But we bought an old fixer-upper house that we were flipping. That was hard. It ended up being very difficult. So had to move in with my in-laws. So new baby, 3 cats, moving in with my in-laws while we were trying to chase down contractors. We eventually moved in, but the house still wasn't done. So I remember sitting there working in the morning before going to work, baby crying, stuff stacked up because we couldn't get people to show up and do the work. And it was a nightmare. Like I was like, I don't want to do this. This sucks. On top of that, when we went to sell our house, the real estate agent said, your house is really nice, but you've over improved it. So all of the effort you put into it and the money that you put into it, you're not going to get all of that out of it. And I was like, well, that double sucks. So it was very difficult to do the project. It was difficult to get people to show up. Basically, what I'd done is I bought myself a job. Like that was like, this is not cool. I cannot do this. This is not sustainable. Okay. So I had to go through this. Well, maybe I'll just quit. But I knew that I wanted to get into apartments. Okay. So how did I get into what we call apartment syndication? And syndication is really just a fancy belief or a fancy word for saying using other people's money. So for me, it was, well, the single family flipping is not appealing to me. It's very difficult to do. It takes a lot of time. Well, the other thing was the rental part of it. There's not a whole lot of money. There can be, depending on how you structure the deal, but if I did the math, I'm like, I need 100 houses. I need 100 houses that I'm renting every month in order to make the cash that I want to make. It's like I'm interested in doing that. Well, then I looked at apartments and I was like, well, with apartments, that makes more sense because then I can scale. But then I quickly learned how much they are, and I was like, well, I don't have the money to do that. So I was like, well, I'm done. But then I learned about apartment syndication. And apartment syndication is where you work with other people and you pull other people's money and you use the bank, you leverage other people's investments, you get them a return on your investment, and you can actually get into a deal without having to put any money in yourself or very little money yourself. So I learned how to get into apartment syndication. Okay. Now you might be asking yourself, hey, Stephen, if I'm really using other people's money, right? I understand the bank, but if I'm really using other people's money, can I even make any money doing deals like this? Like, how much money is there even for me if I have to pay these other people back? Okay. So, what I'm going to do is I'm going to break down for you what that would look like if you were to be what we call general partner. You put a deal together. What would that look like for you? How much money could you make in a deal like that? Okay. This scenario assumes a $5 million deal. We do what's called an 80-20 split. So 80% of the ownership is for your limited partners, and then 20% is for you as a general partner. And it also assumes that you invested 50,000. So you don't have to invest in 50,000, but there's a really cool way where you can take what's called an acquisition fee when you close a deal and actually take that money and use it as put it back into the deal as part of your investment. So let me walk you through this. If you had a $5 million deal, when you close on day one, there's an acquisition fee of 3%. So you could make on day one $150,000. Okay. So this is payday number one, 150,000. Then as you own the property, you get cash flow from it. If you had invested the $50,000, you would make about, 10% cash return. And it could be a little bit higher, a little bit lower, but I'm just using, easy math here. You would make over the course of 5 years, you're going to hold it for 5 years, you're going to make $20,000. And that's just on the $50,000 investment, you're going to make your 20,000. Now what happens, you get 20% of the deal on day one. Okay. So now you're going to get GP split $45,000 a year or 225,000 over 5 years. And you give yourself an asset management fee. Okay. So that's going to be $60,000 over the life of the project. Now, this gain from sales proceed, if you had invested the 50,000 up front, there's another 20,000, but then you've got the 20% GP split. So there's 360,000 when you sell it. Okay. Total returns for this would be $885,000 if you $50,000 back. If you didn't put the $50,000 in, you just subtract 50,000, so 835,000. Okay. So a $5 million deal could easily, over the course of 5 years, get you pretty close to being a millionaire. And that's just one deal. Now, when you do this, you're probably going to split this with one or two other people. But what I want to demonstrate here is this is how apartment investing allows you to very quickly and easily accelerate the money that you're making with a whole lot less effort and using other people's money. So is that exciting to you guys? Is that starting to sink in? I know it's a lot of information, but how long would it take you to do that with single family flips? Like how long would it take you to do that? Or how many houses would you have to have rented out to make that much money? That's a lot of effort. And you can do it with one apartment deal. Okay. Now just imagine having 3 or 4 apartment deals. So that's where things get really starting, really, really exciting. Okay. So let's go through these 5 pillars now that you've got that understanding. Pillar number 1 is really your mindset and getting started. Okay. So what's the very first thing that you should focus on? For me, I can tell you, you have to make some big mindset shifts. That's the reality of it. And I went through a lot of that. I went through a lot of those mindset shifts. So there's a lot of things you might be telling yourself. I'm not experienced enough to buy an apartment complex. Okay. I bought a 184 unit deal with no experience. Okay. I can make more money by flipping single family homes or wholesaling. I just showed you how much money you guys can make doing apartment investing. A lot more with a whole lot less effort. Okay. Why would you mess around with that? Okay. How about I don't have the time to learn how to buy apartments because I work a 9 to 5 job? That's crap, guys. And I can tell you because when I started, my son was 2.5. My wife was pregnant with my daughter. We were in the process of moving and renovating a house. And I was very busy working for a Fortune 500 company that was going from the bottom of the Fortune 500 to the top. We were extremely busy, but I figured out a way to do it despite all of that happening. It's really just making it a priority. Okay. And then here's the other one. I don't know how to find partners to do deals with. That's really just a decision that you make, and you just make it to be in the right rooms with the right people. Okay. So what's the best way to start if I don't have any experience? For me, I can tell you, I made a decision to hop on a plane, fly halfway across the country, and I walked into a room full of a few hundred apartment investors. And I was immediately surrounded by people that were doing this. Okay. So I went from, I don't know how to find partners, I don't know anything about this, to I made a decision, hopped on a plane, and I just ended up in the right room. That decision for me, that one decision changed everything. Okay. But how do you do this? So I'm telling you guys, don't do this alone. Don't try to do it alone. You want some people to help you do this. It's going to shorten your learning curve significantly. Okay. So here are the main roles that you need if you're going to do apartment syndications. Syndications, like I said, it's just you're just using other people's money to move faster and get into these deals. All right. So here are the primary roles. You need someone who can find the deals, it's your deal hunter, someone who's raising capital, someone who's underwriting deals, someone who's got some experience and has done this before you. And then you come to the loan requirements. You need someone that has some net worth and liquidity. And then you also need to be able to put a little bit of money down on the deal and then someone to do the asset management. So here's what's great about this. You have a team of people. If you want to further and you want to make a bigger impact, you need to do this with other people. So the beauty is you just find the things that are best for you, that you're best fit, and then you find those partners to help bridge those gaps for you. And that's it. Okay. So, and some of these you can learn to do. Maybe you're really good with numbers. And so you want to do underwriting. Maybe you're really good with talking with people and you have a good network. You want to do capital raising. Maybe you live in a really good market. You want to be the deal hunter. Maybe you love project management and you love working with people and implementing a business plan. Maybe you want to be an asset manager. Okay. So you pick the one, the two, or the three things you're really good at, and then you just go find the people to complement your skills. Don't try to do everything. Okay. So lesson number one is really change your mindset to I can't do this, and then find a team that's going to help give you what you need. Okay. So now you know how to take the first steps. And if you understand that that's really a lot of this is self-talk and limiting yourself, that's how you're going to move forward and move past this. Okay. So what is number two? Number two is now got to get into locating deals. All right. So I remember when I first started looking at apartments, I thought I had to buy deals that were close to me. I was like, I got to find these deals that are in my backyard. Well, guess what, guys? I live in California and it's not always been the best place to in deals. And so I'm like, oh, I'm going to start looking in my own backyard. And what I found was that maybe it wasn't the right place for me. And so I figured I'd have to stick with, like I said, stick with what's local. So I started working with other partners. That's when I realized that I wasn't limited to my own backyard. So I see a lot of people who are like, I have to find deals that are close to me. Maybe, maybe not. But how do you find the best markets? Let me show you exactly how to find the best market. Okay. You are looking for these exact things. Okay. Landlord and business friendly states. Very important. You're looking for a location with above average population growth. You want a place where there's a steady inflow of people. Above average affordability gap. What that means is there's a big gap between renting and owning a home. That means there's going to be a lot of renters. And maybe you guys realize that in certain parts of the country, there's just a lot of renters. There's a huge inventory of apartments because most of the people that live there are renters. You also want a place that has above average job growth, and you also want a diversified economy. So now we start talking about primary markets, secondary markets, and tertiary markets. If there's a market that really only a major employer, that is a red to me. I would not recommend it in a place like that, because if something happens to the market, and oil and gas is one of those that can fluctuate, and if something, then you're really in a bad spot. Okay. So then you're saying that's great. Where? Okay. So here's top markets. Okay. Dallas Fort Worth area is fantastic area. Houston, Southeast Florida is a lot going on down there. Salt Lake City, it's a kind of hard into, but it's another good spot. Charlotte, Las Vegas, Raleigh, Indianapolis, and Nashville. Okay. If you don't live in those areas, that's totally okay. There's a lot of other really good markets. I'm just saying here's top 10. If you can partner with other people, like I just mentioned, who are in or close to these areas, that's good. If you can get to these places in a short flight, for me, it's about 4 hours to get halfway across the country. I can do a direct flight from where I live to Dallas. It's a good market for me. In fact, all the deals I've done are actually in Texas. Okay. So I live in California, but I don't invest here. I haven't done a deal here. If you don't live here, don't worry about it. You've got places to go. Okay. All right. Now, what types of properties should I be investing in? So now that I knew about these other markets, now that I knew about these better places to really start stacking things up, I was back to this problem of, well, what kind of property is it? A class, B class, C class, what neighborhoods? I really was like, what do I invest in? So I still had the issue of like, what should I be looking for? So I thought maybe I should just underwrite every single deal and I'll find one that works. Well, that sucked. I spent a lot of time underwriting all of these deals, but what I learned after underwriting hundreds of deals is really what the sweet spot is. Okay. And the sweet spot is stabilized properties where value can be added. So not a distressed property where you've got 50, 60% occupancy, but a well-run property, but there's meat on the bone, meaning you can go in and you can update some of the units. You can go add covered parking. You can do an internet contract. You can add washers and dryers. You can add private yards, something like that. So where there's opportunity to go in and add value very quickly. I like smaller properties in the 20 to 60 unit range. Now, hear me out. Those larger deals, that's what I've done. They are a lot harder to get into, and you're also fighting against larger institutional buyers or large syndicators. Okay. They have different criteria. If you're really trying to get into your first deal, don't do that. I'm telling you, go for something smaller. You will thank yourself. You have to raise less capital. You don't need so many people to partner with, fighting against a different buyer pool. When you get into the 5 to 10 unit range, there are people that have enough money in their pocket. They're not raising capital. When you get to 20 to 60 units, it's a nice sweet spot to raise a little bit of capital, come in with maybe another partner or two, and you've got a deal. Okay. That is a nice sweet spot. I'm telling you guys, trust me on this. The other thing is B and C class properties. I like B and C class properties because that's where the working class is one of the first classes to be hit if there's any issues with the economy. Where do people from A class move? If there's an issue, they move into B class. Where do people from B class move if they need to lower down? Move into C class. They don't make new B class. They don't make new C class. It goes back to where you can add value. That's a really good spot. And then, like we were talking about markets earlier, primary and secondary markets, target those. And then where you've got a median household income of 55K or higher, and that's really going to be market specific. But the point of this is you need to, if you're going to go in and do these value adds, then the people living there need to have enough disposable income to be able to handle that increase in their rent. Okay. Now, I don't want you thinking that this is something that you're doing bad. You're increasing rents. You're improving the property. You're making the property better for them and their family. You're making it safer for them and their family. Okay. We don't want to have a dilapidated place to live. We don't want our residents to have a dilapidated place to live. We're really improving the living for them, the livings for them. So that's your deal criteria. Okay. Now, how do I find an apartment deal? More specifically, how do you get that deal flow? All right. So I'm going to go over these with you. Now, I used to think when I first got started that everything needed to be an off-market deal. That's the only way I'm going to make any money here. I want the off-market deals. And what happened is after I started telling brokers that I only wanted off-market deals, is they said, we don't want to work with you, man. Like we've got all these other deals. Like you haven't ever done anything with us. So they're like, they quit responding to my emails. So I told myself I'd have to just take the bad deals that were on market. And what I learned is a couple of things is if you build a relationship with the brokers, they're gonna show you the deals as quickly as they get them. So I've had multiple deals come to me that they haven't been marketed and they'll just send like, here's the financials on it. Take a look at it. Does it make sense to you? And then the other thing is most deals off market. There's some that are out there, but think of it if you've ever sold a house, do you try to sell a house yourself so you can get the most money you can get in your own pocket? Do you want to be selling a house yourself? You don't. Do you want to be handling, acting like a real estate agent? You don't. So as an owner, I'm going to go to a broker and I'm going to say, hey, list my property and sell it and get me top dollar for it. So most deals are not off market anyways, so don't chase those. Now, where else can you get deals? So you're going to go listing brokers. Okay, I just mentioned that listing brokers. Don't worry about chasing off-market deals. You'll spend so much time trying to perfect deal where you're just missing all these other opportunities. Your team. So, for example, this 184 unit deal that I'm talking about, that actually came from a mortgage broker. It actually didn't come from the listing broker. It actually came from the mortgage broker, but it's someone I had to build a relationship with. So your team could be other people that you're partnering with. It could be property management companies. It could be insurance company. It could be mortgage brokers. There's a lot of people out there who are not brokers that you can also get deals from. Okay. There's LoopNet and Crexi, and I've got a whole other training where I show you guys how to use that, but those are online free resources. Yes, you can go to owners. Absolutely. MLS, unless you have a subscription, you're not going to have direct access, but you can use Zillow. But Zillow is going to have smaller deals. There are paid subscriptions. I've never had one, never needed to. So I don't think you need to do that. And then there's also an investor groups or your local NAA chapter. Here's what I want to tell you more than anything is it's all about truly, it's not what you know, it's who you know. It's building the relationships to get the deal flow. That's how you get the deal flow, guys. That's it right there. So now, quick recap. So now we covered number two, locating deals. So I've shown you how to find the best markets, my top 10 markets, the exact types of properties you should be investing in, and the best way to get deals. So let's go into the next pillar here. Now we're talking about analyzing deals. So how do I find deals that actually pencil out? So I used to get up every morning at 5 a.m. before anybody got up, and I would spend an hour and a half or so underwriting deals every morning. Okay. And I spent hours and hours and hours doing this. I told you I underwrite hundreds of deals and figure out like what deals make the most sense. But then I also needed a way more efficient way to underwrite deals. Like this is killing me here. Like I spend this much time underwriting deals. I'm going to give you a shortcut. Okay. A quick property analysis. Now, I think Scarlett, you're on the webinar, and this is something in our group coaching community we talked about, and you use this, and I think it helped you out tremendously. I think it like shaved off hours or days of underwriting for you. But here's what we're going to do. Okay, so there's really four steps you can leverage here. So step one, you're going to take the operating income, and that's going to be the number of units times 12, because that's going to be over the course of a year, times your market rent, and you're going to do 93%. That assumes 93% occupancy. It's a good target number to have. So that's your operating income. Then you're gonna figure out your expenses. Okay, your expenses really should be 50 to 60% of your income. 50% is a nice ideal round number to use. So you're going to use 50% of your income, or that's your operating expenses. So your net operating income is going to be your operating income minus your operating expenses. Then you're going to take your property, and then you want to find your property value. So that's going to be the net operating income from step three, the cap rate. Now this is going to vary from one market to the next, but a pretty good starting point for C-class properties is going to be to use a 6% cap rate. So let's take a look at what this would look like. I'm going to show you a real deal here. So in this, we've got a 46 unit deal, and this circle should actually be down here. We know that our pro forma rent is going to be just over $1,000. So $1,118 a month. Okay. So let's take this. We're going to plug it into our quick underwriting and see what that shows us. So if we take our pro forma income, that's 46 units times 1,118 per month, times 12 months, times 93%, that gives us 573,000, almost 574,000. So we're going to use 50% of that to dial in our expenses. So our net income is going to be 286, almost $287,000. If I use a 6% cap rate, what that shows me is within minutes, my future value is 4.7 or $4.8 million. Okay. So that's a really quick way. If you don't have access to any type of analyzer tool, or you don't want to spend hours trying to figure out, is this deal even going to make sense for me? And, like this will save you a ton of time. So Scarlett, I saw your comment there. Yes, the quick analysis helped me out a lot. And it did. Like it was, I mean, literally we were in the group coaching and she said, hey, I did the quick analysis. We took that, we plugged it into the formal underwriting tool, made a few tweaks. And then, Scarlett was able to go back very quickly to the broker and ask the right questions that she needed to move forward. So now, what information do I need to underwrite a deal? So I used to think that apartments were really nothing more than multiple single family homes, and I found out that was really wrong. And I was trying to underwrite some of the math for single family homes. And what I had to learn is that you're actually buying and selling businesses, okay? And you have to treat it like that. You have to learn that the way you want to underwrite this is not like a single family home, but you want to underwrite it like a business. And so with that, what are all the things that you need to look for if you're going to treat it like a business? Okay, this is a complete list, everything you're going to underwrite a multifamily deal. Here's everything, okay? So you will need the things that are up here in white. These are the things that you should be able to get from a broker pretty easily. You might see these on LoopNet, you might see them on Crexi, but definitely a broker would have these. If the deal is being marketed, you're going to have what's called an offering memorandum. It's going to have all the marketing material. You will need a T12. That's your 12-month profit and loss, and you're going to need a rent roll. Okay. From there, like I said, you can get these things, and that's what you need to start your underwriting. There, you need to be able to come up with the unit mix. You need a rehab estimate. You've got to come up with your budget that you're going to be spending on these deals. You also need to determine your actual net operating income versus your pro forma net operating income. So we showed you a quick analysis tool to do that, but you need to be able to figure this out right here with a pro forma net operating income. You need a pretty good debt estimate. And so I'm going to tell you about that here in just a little bit. You need an insurance quote. You definitely need a property analyzer. You can't do this without a property analyzer. You need to do a market survey. So what is a market survey? That is you actually going out to the market or picking up the phone and talking to the other apartment complexes in the area and finding out what it is they're doing that you can implement into your business plan. And you need some market data. Market data is going to show you things like vacancy. It's going to show you things like rent increases. It's going to show you what the other properties are doing in the area. Really, really, really important. If you have all of these things, and some of it you have to build yourself as you're going through and doing this, you can't ask somebody for a market survey. You got to put that together. You can get market data. You have to do the work for the property analyzer. You can ask for an insurance quote. But these are the things. If you have all these things, you can get the deal to pencil. This is when you can submit an offer. Okay. So now you know how to quickly underwrite a deal and everything you need to have in order to create your business plan. All right. So what is next? Then the next thing that's going to happen is you're like, how do I pay for this thing? Right. So I've got my mindset right. I've got my partners. We've been able to identify our markets. We've got deal flow. We've been underwriting. Now we want to submit an offer. So what does that look like? And I'm going to walk you through that right now. So my guess is, right? So how do I fund deals without using my own money? And I will tell you, all roads lead to this. Every time I do this, the question always comes up, how do I pay for this thing? I don't have millions of dollars to go buy these properties. Well, guess what? I don't have millions of dollars to go buy these properties, right? Tens of millions like that. So we do it by the syndication and using some other strategies. Okay. So probably a lot of you were thinking that you have to start small and slowly work your way up, right? You were probably thinking that. You might have told yourself, I can't afford to buy an apartment building. Okay. And I'll tell you, I used to think the exact same thing. And I was looking at fourplexes, I was looking at 8 and 10 unit deals. And it just never made sense. And so I really thought was the limiting factor for me, that was it. And I was like, I can't get past that. But then I learned how to get past it. So then I learned that I couldn't use that as an excuse anymore because I had a way to leverage other people's money. So how do we do that? So you basically have three areas, okay? You have your primary loan, and it's going to be either seller financing. You have traditional lenders, or you have private lenders. So traditional lenders are going to be banks, or you also have private lenders. There's quite a bit of private capital out there, and that's going to be, and I'll show you here in a second. But that's going to, be 65 to 80-ish% of the financing for the deal. Then gap you have to close. You're going to have roughly 20-25% that you need to close. And how do you do that? So there's also private equity that can come into play, or you learn how to raise some capital. And then you also have to have some money to put down when you buy the deal. How do you close that? You either have to have the money, or you can leverage what's called a hard money lender. So these are all other people's money that you are going to learn how to leverage. Okay. So let's take a look at what that would look like if we split that up. Okay, so in your first group right here, like I said, you have seller financing, traditional lenders, private lenders, and we're just going to call that roughly 75%. They're going to bring this much money. So that already solves a big problem for you, is you're bringing in to do the vast majority of the funding. Then you have other area to close right here. And what you can do is you can either do all you do all capital raising to all of this, or maybe you get private equity to do part of it, and then your capital raise portions will even a little bit smaller. And then you have to just put money down on the deal. And if you don't have all of that, your partners is generally it's between you and your partners, you can come up with the money for the deal. And if you don't have that, then you actually use a hard money lender. It's a short-term loan, right? It's exactly what hard money lenders are looking for. And so you can leverage other people's money for the whole thing. And then when you get your acquisition fee, you pay the hard money lender back and everything is good. Plus you get to have equity in the deal. So it's a win-win-win-win for everybody. All right. So now you know money isn't what's keeping you from getting into a large apartment deal. Okay. Your lack of money is not your issue. It's truly your mindset. And I said that at the beginning, you have some limiting beliefs you've got to work through. Okay. So do you see why that's so important is to change your mindset, to set aside these beliefs, and they'll all be there, but you have to learn to not listen to them. All right. So this is, to me, this is very exciting. This is the steps you need to take to get an apartment deal. Now, I know there's a lot of pieces here, but these are the pieces that anybody who's doing it, these are the things that they are doing. These are the exact steps that they are following. All right. So now is the very last pillar. And this is where a lot of people, I think, miss out or forget about. You got to do the asset management. Okay. Once you have a deal, this is where you're going to own it for a while and you have to manage the asset. Okay. So what I want to talk to you about now is, what do you need to know about running and operating an apartment? Now, when I started in real estate, I told you I was looking into single family homes, and the plan was to always self manage. But and I also told you I was like, I gotta have 100 deals. Like that sucks. I'll have to be a professional property manager. Like, I don't know that I'm interested in that. And so I was like, even if I can buy a deal, like I don't know how to manage it. I'm not a property manager and I didn't want another job because, single family home, maybe I make $200 a month. Like after I get four or five, it's not even close to replacing my income. So I was like, it was really hard. But what I learned is the best thing you can do is honestly is like hire a property management company. Truly the best thing you can do because that's what they do all day long and they know the market like way better than I do. Okay. So why you need a property manager, especially on your first deal, you don't need to be on site or hands-on. You don't have to do that. You get to avoid burnout and focus on growing your portfolio. Let them do their job. You get to tap into their systems, their teams, and their expertise. That's what they do all day long. And I'll tell you what, lenders, a lot of them, they won't let you do a deal if you're going to self-manage it. They want you to have a property management agreement. It actually makes you more lendable and credible to other lenders and investors because they want to see that you're bringing in someone professional to do this. So it's actually a good thing. And in some cases, a requirement. Okay. So you're going to leverage a property management company because here's the other thing, guys. Ultimately, what do we all want? We want time freedom. So we're buying and selling businesses. We're leveraging other people's money to buy those. We're also going to leverage other people's time so that you can get your time back. That is the secret to all of it. Okay. You're leveraging other people for the whole thing. That is how you do this. Okay. So what are the key metrics I should be tracking post acquisition? So another quick story for you. First deal, I would raise my hand to do asset management. And I was like, hey, I could do this. I've got, tons of experience, corporate America, never a formal project manager, but it can't be that hard. But I stumbled pretty bad on a lot of areas to where we even had the regional property manager tell me, hey, you could be doing a better job. And I needed that feedback. I needed help and support to the property management company. They knew what to do. I didn't. That's why they're very important. And that's okay. And they help me out with it. But you want to treat your apartment like a business. If you treat it like a business, it'll pay you like a business. If you treat it like a hobby, it's going to pay you like a hobby. Okay. So that's what you've got to do. So I want to show you the exact things that you need to focus on here. So here's your revenue metrics. You got to focus on revenue. What's your gross potential rent? Your effective gross income. So what is it after vacancy and concessions and your occupancy rate? which is the number of units rented versus total available, and then your economic occupancy or vacancy, depending on how you look at it. So your actual income collected versus your potential income. So if you were to look at a financial statement, there's not a lot to the profit and loss. It's you have the income stuff up, but these are your key metrics. And when you're doing your reporting to your investors, you're going to be reporting on this stuff, and you're going to be sharing it with them. Like, where are you at? And if it's not where you need it to be, what is your plan to get it there? So these are important revenue metrics that you want to be tracking. All right. Now you got to track your expenses. So you have your operating expenses, that's your repairs, payroll, utilities, et cetera. Your maintenance and turnover costs, keep that as low as possible. And then I mentioned it before, but your expense ratio, ideally 50% or lower. And it might be a little bit higher when you first start, but you want to be able to see in your 5-year model that that's going to come down as much as possible. Okay. So now your expenses are broken out in a much larger section. There's a lot of things that go into expenses. And so if you don't watch those closely, they will come and get you. It's another reason to leverage a professional property management company, because they're going to be helping you watch those things. But you're also going to be reporting on this when it comes to what you're going to be sharing with your investors. Okay. Here's some additional metrics. Your net operating income, your cash on cash returns. And cash on cash is when you're pitching the deal to potential investors, one of the selling points. And so you've got to keep a close eye on this. Okay. Your delinquency rate. Now, here, this one's really, really important, because you might have a high occupancy, but if people aren't paying rent, or, then you've got high occupancy, but you've got also high delinquency. And that's a really quick way to be losing money. And then the other one is turnover time, days it takes to prep and lease a vacant unit. So you need to be able to have every day that goes by that unit is not leased is just money that you're losing. So you need to have that be able to be turned around quickly. And you're going to watch that. And you're going to monitor that every single day. Okay. So now you know the best thing you can do for these apartment complexes is actually hire a professional property management company. Like I said, treat this like a business and it will pay you like one. Treat it like a hobby and it will pay you like one. Okay. Now, guys, I've shared a lot of information with you. So, how many of you are feeling a little bit overwhelmed, excited, but maybe a little bit overwhelmed? Probably some of you are feeling that way because there was a lot of information here. Okay. And look, here's the reality of it. Buying your first apartment deal, I'm going to be really honest, it can be hard and it can be lonely. All right. A lot of you on this call probably have been doing a lot of the things you've been doing in real estate by yourself. Okay. So, what if I could help you buy your first apartment deal without any prior experience and show you how to do it using other people's money? And then show you how to go full time as an apartment investor. What would that do for you? Honestly, like, think about that for a moment. What if you could learn how to buy apartment complexes and it's all you did? What would your life look like? Where would you go? What would you spend your time? What would you spend your time on? Like, what would you be able to do with your family? That's a really good question. And there's a lot, it changes everything for you guys. Totally changes everything for you. Okay. So I want to invite you guys into my multifamily fast track community. And I put this together in school. So I know a lot of you are probably already in my school community, but this is designed to give you the tools and resources you need to get into an apartment deal. The multifamily fast track is the apartment investing framework that's going to teach you how to buy your first deal by leveraging proven strategies to buy apartment deals. Okay. So who's a good fit for this? If you're new to real estate, multifamily investing, this is going to be a really good fit for you. Or maybe you've got some experience, but you've been struggling and you want to grow and scale and you want to work with somebody who has that experience to help fast track you. Maybe you're tired of wholesaling or doing single family fix and flips. That's a tough one right there. That is, work hard. Maybe you make some money, maybe you don't, and you're just tired of that and you're looking for a way out. Okay. So at this point, you really have two options. Okay. You can keep doing this by yourself. You can say, I'm not quite ready for this, or maybe I'll do it on my own. Or there's an easier decision. You can decide right now to make buying apartments a priority and use my proven frameworks to help you achieve your goals. Okay. Also have a lot of questions that we get asked. And so I'm going to go ahead and answer these for you while you guys are thinking about your questions, okay? So, question number one is, what if I'm not the entrepreneur type? Can I still succeed in multifamily? And the answer is absolutely. Most people are not the entrepreneurial type. A lot of people have a lot of different backgrounds. These are things you have to learn along the way, and it's very learnable. Like, it is not hard to do. You just have to be committed on the journey to get that information. How do I know this isn't going to be just another thing I start and I don't finish? And that's why I've got the accountability calls for you guys. What if I'm too late in the game? I can tell you guys you're not. The opportunities are better than they've been in years. And then, do I need a bunch of cash or six figures income to get started? And I already showed that to you guys. Absolutely, you do not. You think you're busy with a full-time job and a family? I did this whole thing very busy with raising a family and a job. You can do this. What if I'm more introverted? Can I still raise capital or find deals? Yeah, there's a whole lot of different roles that you can do that are going to help you get into these deals. That's what's beautiful about this is you can just find the sweet spot that works for you. What makes this different from the free YouTube videos or other courses? You've got access to me. And we've got training that's not in YouTube or other courses. But I think the biggest thing is you've got access to me to help answer questions for you live twice a week, guys. I'm making myself available for you. How do I stop overthinking and actually take my first step? That's easy. Just go click that link and sign up. It's totally risk-free. Just get in there and do it and quit questioning yourself. Just go do it. Can I really do this if I failed to other businesses or investments before? Yeah, absolutely. Like, did you ever, did you learn how to ride a bicycle the first time you fell off? Did you just walk away and never get on a bicycle? Probably not. You got back on. But it's just taking those steps and learning how to do it, guys. Okay. And what if I'm passionate about real estate, but I'm scared of talking to investors? We're going to give you the tools and resources you need to help you work through that. Plus, you have partners that can help you along the way. So, all right, guys. Well, I appreciate your time. I don't see any other questions coming through in the chat. So I'm really looking forward to meeting some of you in the next coming week into the multifamily fast track group. We've got a great group in there right now. They're out there looking for deals, underwriting deals. It's really fun to work with them and see them be successful. And I'm excited to see you be successful as well. So folks, I will talk to you soon, and thank you so much for your time.